Well, as part of Ontario's fall economic update, the province announced it is launching an infrastructure bank that includes an initial $3 billion in public funding, an arm's-length lending agency that would help build major projects in affordable housing, healthcare, and transportation. Now, there is already a federal infrastructure bank in operation, the Canada Infrastructure Bank, and it says it welcomes the OIB into the fold. Let's bring in Ehren Cory, the CEO of the Canada Infrastructure Bank, for some perspective on this. Thanks so much for coming in.
Thanks, Jacqueline. Nice to see you.
Yeah, you too. So you consulted with the Ontario government on this in terms of the design of it?
Well, over the last few months, as Ontario has been thinking through whether they want to do this, they've consulted, I'm sure, with many, including our team. So we spent quite a bit of time talking about lessons learned, what we've been seeing in the market, and how we could work together.
Okay, so lessons learned. The Canada Infrastructure Bank has been around since 2017.
Correct.
So over those years, what are some of the lessons that you learned in terms of, maybe getting projects started or what have you?
Well, the biggest lesson, and you and I have talked about this, we have a massive need for reinvestment in infrastructure in this country, and we can't get it done through our traditional means alone, meaning funding through our tax base and our traditional public sector, and we can't count on the private sector on their own to take the risk and uncertainty that come with infrastructure projects that can last 50 and 60 years. So I think the biggest lesson is that there is a role for alternative financing, for blended finance, what you call an infrastructure bank, using public dollars, leveraging it alongside pension funds, private capital to get more built. That's the biggest lesson. And if you look at our track record over the last few years, we're now up to 50 projects that we funded. $10 billion of our money. Those projects are worth $30 billion in total. That's all new infrastructure. So I think Ontario looks at that and says there's a real opportunity to go even faster at what's already been a pretty ambitious build here in Ontario over the last few years.
Do you think there will be projects where there might be overlap between the funding from both infrastructure banks?
Well, I think there'll be places where we can collaborate. So when I think of their mandate and ours, there are some clear places around electricity, for instance, where the CIB has already made investments in Ontario, and I think going forward, we could co-invest in those, and that's great. So I would describe it more as a chance to collaborate. There are some things, long-term care, investment in affordable housing, that are not core to our mandate, so they'll probably do those. But I think there's really good synergies on the electricity side and transit side.
Yeah, collaborate does sound better, because when you think about the idea of, applying to both, perhaps, would there be a way that if there was a project that would work for, a combined collaboration there, would there be a way to cut down on paperwork that, a business would have to do in order to get this done? Because that is something that you hear so much about. The options might be out there, but it's actually getting, the paperwork done, the bureaucracy part figured out that can slow things down.
Absolutely. Well, part of the benefit of an infrastructure bank, we do behave commercially. We're like a lender, like a bank. Yeah. And lots of banks do syndicated loans. They do club deals where multiple lenders lend together. That's what we're talking about here. And the good news is that's our track record across all of the projects we've done so far. In Quebec, we work with an organization called Investissement Québec. In Alberta, we've worked with the Alberta government. In Ontario, we've invested in projects like the Darlington small modular reactors alongside Ontario. So even before them having an infrastructure bank themselves, we were doing this. And I think we'll continue to. Yeah, we can share due diligence and materials as any lenders would. And that's what I would expect will happen.
What is the environment like right now when it comes to attracting capital, that private investment?
Well, as you know better than anyone, the world is a really uncertain place right now. And we're seeing upheaval in so many of our markets. Think of global energy markets, food supply, and our supply chains in general. So it's a challenging time. And then interest rates have also made investing in infrastructure challenging. So I would say that's true. On the other hand, I think the appetite has never been higher among institutional investors. Think of our Canadian pension funds, or think of private companies who are looking to put money into reliable, safe jurisdictions, places like Canada. So I think there's sort of two competing tensions. Overall, I think the appetite is high, the ambition is high, the uncertainty is also high. And I think that's why infrastructure banks can play such an important role in bringing down some of that uncertainty, sharing some of the risk in projects, and that'll allow capital to flow.
And just remind us of some of the sources of capital for the Canada Infrastructure Bank. Is it the pension funds as well? So yeah, ours is quite similar to how Ontario will be set up, from what I understand. The way ours works, the federal government seeded us with $35 billion. That's taxpayers' money, which our job is to invest it. We make loans and equity investments. We get paid back that money, and then we can put it into the next project. We put that money alongside
pension funds, private investors, private equity firms, energy private investors. We put our money beside them, also beside other levels of government. So you get, that's why I say blended finance. You could have money from a province, a loan from us, equity from a private sector player or a pension fund, and that's what's doing the project. And that's how the CIB is structured. So when I say we've invested 10 million, I mean of our money. That translates to projects that are worth 30 billion.
Right.
So when our money goes in, beside it are those other sources of capital. And that's how Ontario, that's the same kind of multiplier effect Ontario, I'm sure, is looking for.
What's your sense of demand right now for starting projects? Because, you know, we were just talking with RioCan, which is in the real estate space, and they're talking about, pushing forward with development plans, but not construction. The financing costs are high, and just the costs of building are high right now for materials, but also for employment.
Yeah.
Taking all of that into consideration, you know, what's the demand side like?
Well, it depends a little bit on the sector, but overall, I think it's very high. And infrastructure, this is what's so important to think about. Infrastructure is truly investment in the long term. It's increasing our trade capacity and, you know, growing productivity of our economy. Money spent on trade corridors is meant to grow our economy. Money spent on transit is meant to help people get to work faster, be more productive, have less emissions in the way they commute. Energy, we've got to electrify pretty much everything we do in the coming decades, our home heating, our transportation system. So there's huge investments in those sectors.
Yeah.
I think it's a bit harder and challenging in some other sectors. Buildings would be a classic example, given what's been happening in the world. But for the most part, a lot of demand.